Welcome to Commodity Analysis and the E-mini S&P on Friday, the 5th of April. We're 45 minutes away from the non-farm payrolls data in the States, and further to yesterday, I'm extremely concerned. The market looks extremely fragile here. You have to look at recent price action, and let's go down to the 60-minute on the ES. This is the June contract. You can see the touch that I posted on the blog last night. This is the touch on the back of the upsloping reaction line that's carried price higher. The coordinates of the fork from which this comes were all in the first video, I think the end of March, but they're freely available. You can draw this yourself using an automatic custom indicator. It's worked a treat. Up we go, and let's have a look at it. There it was, the touch on the back of that line. And price had to, this was the fork we drew here, price had to touch that center line, and it was going to be a good indication of how we're doing. And you can see it's a miss just using this pivot, and this is the easiest pivot for it to reach, the relationship between this, this, and this. We can always change the, if it was really strong, the most acute angle like this is always reached. But in a market that's maybe undecided about its future direction, this pivot is normally touched, and it's a miss. If we go down to, there you go, this area here has not been reached, this center line, it's a miss. And what I like to do with this though is go up to the 60-minute and see if there's any frequency along this line, and there is. Look, we use that pivot, we've got a bounce on there, which shows that we can actually use that one there, and it goes right along that reaction line, sharing the same frequency. So we are definitely moving into what I think is a downtrend, as we've seen since the sharp sell-off a few days ago. Let's leave it on this pivot because I just want to show you how price bounces here. We go down to the 30-minute, and you can see price comes down, it hits this line, bounces up, gives off and expends energy, and then this morning we've seen price fall through. And let's look at the big picture. Where are we heading? Right, this is the fork. This gap here is important. We've already drawn a fork off it, but the fact that this fork of these three pivots is the dominant fork at the moment, and that would take us to 1534, 1535. In addition to that, we've got this little baby. This is using, if you remember, that beautiful inverted head and shoulders there. So we're using these big pivots, and that gives us 1518. Now, let's just have a look at, there we are, there's another view of it. There, that reaction line, and I've drawn over it, is from this fork, okay? And you can see how this downsloping reaction line from an F&L fork, and those are all covered in the course, has really worked a treat. All along here, price distribution isn't just it hasn't just pinned off one side of it. You always get this sort of distribution depending on the behavior and the nature of price and what phase it's in. You can see it worked a treat here. So that F&L fork worked a treat. And again, the same, these are the different locations we're trying to get into. And this, I think, is still in play. And what happens is the reaction line has just offered its back a touch, and price has risen. That doesn't mean it's not going to, we may now well get a touch, a rally up to this blue supporting, that's the gap fork that I showed you yesterday. See how that, again, price distribution, don't always expect, this is very important, one of the most important things, don't expect a reaction line to give you behavior like this. See this, we'll go back to this one up here, just what I call a pin touch, a hit and run. It touches it and then just recoils. That never happens. You always, hardly ever happens. Especially on reaction lines, you tend to get, more time than not, patterns of distribution either side of the line. Look at this. That's why you often see a downsloping reaction line, yet the actual price is falling along the back side of it like this. And you expect it to fall on this side. It does sometimes, but you often see this, and it's all in the library of different patterns that all the subscribers get. And you'll see all these different sorts of patterns, different effects that reaction lines and median lines have on price. Okay, so we're heading lower. I just wanted to show you this, which is also important. Let's have a look at the Russell. This is the TF. Let's get rid of that. If you have a look here, the Russell's fallen much further and is heading towards these two lines. The Russell has already fallen much further than the ES. The ES seems to be lagging behind. Let's go down to the 60-minute. Some sharp price behavior in the Russell. Again, this line, this horizontal line, which is an upper median line parallel, has provided some sort of resistance from the underside. And you can see it's a valid line. It works. All of these lines work. But again, price distribution is often never like that. That's the perfect hit, isn't it? That is what everyone wants. You want to see a reversal like that. But you don't get them. Very rarely do you get them like that. Maybe 1 in 5. Okay, let's also go back to the ES. I want to show you the ES quickly in a big time frame, in the daily. I just want to show you a little bit about, you see this fork here? This one here. Okay, let's move it if we can. There you go. And put it back. These are the reaction lines for that fork, and I've extended this one beyond the boundary, and you'll see it has perfect effect on price there. In fact, let's just have a look a bit closer in. In fact, that's beautiful. That's beautiful. Okay, and then we've also got this one here. This is the fork that price has just gone wild in. It's just gone grinding higher. We had a touch here, and now we have this blue line I drew. That's just an inserted horizontal line showing me where the other tops are. Let's have a look in the weekly. You can see them on the ES and the monthly. There you go. 1, 2, and we're at this incredibly important resistance level. And if you look, all we've got so far is a small down bar for this month, and it's only the 5th. We should expect to see some, even if we go higher, and I'm not saying we're not going to go higher, all I'm saying is don't expect us to cruise straight through today. There's more than likely going to be a lot of activity around this area. And there you can see these are manually drawn, these lines are drawn by me. There you go. And that shows you, and that is from, let's just show you which fork that's from. Okay. Joining up this fork at these lines, right, at the oblique angle, but joining up this fork here, its reaction lines have given us this. And if we drop down to the 240 and now the 60, now you can see price distribution along that major reaction line, and what looks like, I thought we'd had a breakout. I really thought we'd done it, and we had this ascending pattern. If you were watching, you were seeing that we had a reaction line that was carrying price higher, and a black median line in the previous videos you'll see. But now I've isolated this particular line, and you can draw it yourself. Go to your daily, connect this big pivot here, this one, and this one, and then insert the reaction lines and extend them beyond, like this. Extend them beyond extended. And that's what you'll get, and the effect is remarkable. And that is the third reaction line in that black fork. And let's just make it a beefier one. Okay, there you go. Okay. Anyway, non-farm payrolls await, and we'll be back later. Thank you.